While U.S. grain producers are seeing some of the lowest profitability in history right now, the exact opposite is true for cattle producers. They're actually seeing record prices and profits. And as Farm Journal's Michelle Rook reports this weekend, the question on everyone's mind, though, is how long will it last?
Tide, this cattle market has been nothing short of amazing. The futures have put in at least a half dozen key reversals, only to see the market rebound into all-time highs, pushed by cash. Market analysts have tried to call a top several times, but even when it finally hits, they tell me the strong cattle market fundamentals and demand will mean the bull market will stick around for a while. The cattle market is experiencing a once-in-a-lifetime bull run with historically tight inventory. USDA's recent cattle inventory report confirmed it, with all cattle and calves at 94.2 million head, down 1% from 2023.
But it is tightest going back 60 or 70 years, depending which inventory number you look at. So it is no doubt just a reflection of how tight this herd is.
And the calf crop at 33.1 million head highlights the continued impact of the shrinking herd.
That was down 1%. So it still shows, we're going to see additional limits on the available number of potential placement or available cattle outside of feed yards again in 2026.
Cattle on feed numbers have been declining, down 1.6% from last year, the lowest in 8 years. Placements down 8% for July, the lowest in 16 years.
Lower placements will continue to be the pattern here, and also lower fed cattle supplies, lower fed slaughter numbers, at least for the foreseeable future.
And the percentage of heifers being placed versus steers at 38% indicates low heifer retention.
So it says that, it's a very slow process. We're still above the long-term average here in terms of the percentage of heifers on feed. And so if we are beginning to hold back heifers, it's at a very, very slow pace at this point.
Close says that's because the cost of gain is historically cheap.
If you look at that ratio of cost of gain to value of gain, it also gives a very solid explanation of why that female is still more valuable in the feed yard than she is to take back home.
And profit margins per head for feedlots are also record high.
Near $1,000 a head, closeout profit. You're wanting to take that for sure, in my opinion there.
The cash market has been leading the futures, and last week was just off the record high at an average of $242.
And so it has been the cash market and the cash leadership that has continued to drive this market, and that likely is going to remain the case for the foreseeable future.
He says the closure of the southern border to Mexican cattle imports has added another layer to the bull market.
Since the start of the year, where we've imported over 700,000 fewer feeder cattle compared to a year ago, that is showing up in on-feed numbers, and we are starting to see that showing up in terms of the fed slaughter numbers as well.
Plus, the additional 50% tariff on Brazilian beef imports is further restricting supplies as they're a top source of lean trim.
We use a lot of Brazilian beef in domestic hamburger. It just doesn't make any sense at a 50% tariff. We're already short on supply.
So what could finally put a top in this cattle market? One is a slowdown in consumer demand, but so far there's been no sticker shock, even with the record retail beef prices USDA reported again in July.
There is that demand story that retail prices, like with the July data that just came out that showed a 27-cent increase from the month of June, up to $8.90 per pound for beef. The consumer's demand for beef is just relentless here.
The quest for protein, weight loss drugs, and the high quality of beef are driving demand. And when the monthly all fresh beef price is correlated to hourly wages, they are also in lockstep.
Yes, beef prices have escalated, but beef prices have not risen any faster than the improvement in overall hourly wage. So from the consumer's perspective, their share of their paycheck committed to beef is essentially the same as it's been on a comparative basis for years.
The cattle market could also top if a black swan event triggers fund liquidation in the futures or when producers lose leverage in the cash market.
I think leverage is the key. We've been able to ask for higher prices. If you start to see some heifer retention and we get a Mexican border open up, I think that could be one factor that could do it.
Meanwhile, cattle facts data is showing some signs of herd rebuilding, but it's very slow.
2025, as you look at the January 1 numbers, could be the low in the beef cow numbers, as low as we've taken culling rates, but any increase into 2026 will be pretty minimal.
So he says that means even when the market tops, prices could stay at high levels for a while. I'm Michelle Rook reporting for U.S. Farm Report.
Thank you, Michelle. Well, new signs of a possible trade deal with China soon. Ag Around the World is next.